What's going on, guys? Welcome back to another video. In today's video we're going to talk about AMC, GME as well as the broader market. So for today, AMC was down for 6.66%. It had a high of $15.40. The average volume on AMC is around 48.76 million, which is definitely going down from last couple of days, and today's volume was around 28.96 million. In the pre-market, the market goes up a slight bit and everybody thinks it's a green day, and then these market makers start hedging those call options that individuals are buying at the market open and then driving the price down. But there are a lot of other fears in the market as well right now. There is not only one reason behind the downtrend in the market. And now when we come over to GME, GME was down for 7.83% for the day. It had a high of $102.90. Average volume on GME is around 2.91 million, but today's volume was around 2.20 million. So when we look at today's volume, definitely it was higher than the regular volume that we experience in GME. Usually the volume is around 1.20 million or 1.50 million. The volume is not going up that much because until unless there is some sort of a news coming out of GameStop, we won't experience any kind of a uptrend coming into these two stocks, AMC as well as GME. A lot of investors are investing their money into these two stocks, and these two stocks have a very high implied volatility. So if you're holding the stocks of GME and AMC, you can sell covered calls on it, and they are paying a pretty good premium for this. But if the stock market keeps going down like this, it's definitely going to drag down both of these stocks along with the broader market. But I personally believe if the stock market goes down drastically way too much, still these two stocks can recover really quickly as compared to any other stock in the stock market. Now when we come over to the SPY was down for 1.27% for the day. 1.27% is a lot in one day. It had a high of $428.77 at market open, and after that it started going down. And now we know that for sure there is a lot of fear in the market right now. We have a Russia and Ukraine conflict happening in Europe right now that is not coming to a conclusion yet. They had the meeting done and still there is no conclusion coming out of it for a ceasefire or coming to an agreement over something that will not take this war a little bit more further. Because if this war go in a long run, then there will be a lot of negative downtrend towards the broader market as well as the economy for countries all around the world. The markets are completely unpredictable. Just like before, what we were thinking, that Russia might not invade Ukraine at any cost, but now we have seen it. They have done it already. They have invaded, and now there was a second opinion coming out of the analysts that this war might come to an end within couple of hours or maybe in a week. That thing is of a past. Now we are into almost the third week of the war, and how long this is going to keep going on like this, we don't know. We're going to keep experiencing the downtrend for another 1 to 2 weeks. We have the Fed meeting on the 16th of March. Now 16th of March is next week. Tuesday we are having the Fed meeting where they're going to increase their interest rate for the first time. Now that is very scary scenario that I personally believe. You don't know what Jerome Powell is thinking right now. One thing is for sure, that there will be no safe landing. If Jerome Powell increases the rate aggressively, the Fed will be able to control the inflation, but there will be a negative downtrend towards the broader market. And if they don't increase the interest rate, then the inflation will keep going up, and if the inflation will keep going up, they eventually have to press the brakes really hard. They have to increase the interest rate to that certain point where the inflation doesn't goes up. And now after the incident that's happening in Europe, this thing is all adding up to a total catastrophe, and we don't know how long this is going to go on. We just have to wait for Tuesday to see what the Fed is going to do, because right now there is a lot of money in the market as well as the crypto. All this liquidity is going to get out of the market, and then you're going to experience a lot of downtrend in a lot of companies. Be a good buying opportunities, but you never know that rebound that we are expecting towards upside, when it's going to happen. When we look at the dot-com bubble, it was a downtrend for almost 2.5 years. So you can imagine your stocks might keep going down a little bit more further. Now let's come over to the options flow for the AMC. Now, by looking at the options flow for AMC, I can tell you there is straight up puts coming into this stock. Investors are all betting that the stock is going to go down from here onwards. There was this some of these $12 calls that came in. There was this another $70 call that came in, that this individual is expecting that in another 314 days that AMC might go over $70, and he's buying 135 contracts. That's actually way too much out of the money. But the main thing is this individual is giving a lot of time to himself, so he still has a chance to make it even. But in my personal experience, AMC and GME are the two stocks which are looked by these big hedge funds, those who are shorting it. They are looking at each and every movement that's happening in the stock, the amount of volume coming in, and how they are redistributing that volume towards the dark pool in order to control the upward momentum into the stock. Even after having two back to back solid earnings, the stock didn't move, actually, it went down. So it's still questionable what's going to happen with this stock, but I'm expecting there will be an upside, but we don't know when it's going to happen. But for the meanwhile, I can see there are a lot of put options that came in today. Investors are betting a huge amount of money and they are all buying that the stock is going to go down from here onwards. And now when I increase the premium to max and I see what the big whales are doing, they are all also onto the downside for the stock. They are betting almost half a million 500 contracts by this individual, and he's buying $24 put option which is going to expire in another 97 days. That's a lot of money that he's betting for the stock to go down from here onwards. And there were few other whales as well, those who are almost putting over $100,000. They are all betting that the AMC is going to go down from here onward. Now let's come over to the options flow for GME. By looking at the options flow, again the retail is on to the downside. Most likely today was a absolute green signal to buy puts. You can see it for yourself. They were all coming in the line. There is hardly any call buying that happened today. There was these only two call option that came in today. The rest mini whales are not interested in buying any call option in GME. Majority of them are on to the downside for the stock. When I increase the premium a slight bit to the max, and I see all the whales are on to the downside and they are all betting that the GME is gonna go down from here onwards. The rest, there was nothing suspicious coming out of the options flow. I didn't find any trade that was indicating that there is some sort of a whale is betting the stock is going to go down or up from here onwards, though the overall market sentiment is towards the downside. That's why a lot of individuals are buying put onto these two stocks, AMC as well as GME. Now let's come over to the options flow for the SPY. Now when I look at the options flow for the SPY, again these big institutes are all betting towards the downside for the SPY. They are betting a huge amount of money and they are all betting towards the downside. This is $2.5 million bet and he's buying 2,142 contracts, and he's betting that the SPY is going to go down below $414 in another 33 days time. The unique thing about this situation is these puts are not a long puts. They are not giving enough time to themselves. They are expecting in a very short period of time there could be some sort of a downtrend coming into the market. You can see majority of the puts were coming in which is going to expire in 33 to 20 days to 6 days, because next week we are having the Fed meeting and they can do some sort of a rug pull if they want to. But that was the only unique thing that I can see out of these SPY puts, that they were all betting towards the downside in a very short period of time. They are not giving enough expiration onto them. They are all betting in a 6 days time we might experience some sort of a downtrend into the SPY. The rest, there was nothing suspicious came out of the option flow. There was no major whale coming in betting that the SPY is going to go down from here onwards. Now we just have to wait and see how this is going to play out. Hope so you like my video. Please like and subscribe my channel, and I'm going to see you in the next one. Cheers.